Mark, is this just a wobble, or is this something more significant?
I think this is just a wobble, but it's a wobble that I expect to continue for another couple of weeks. We've talked about in the show over the last week or so that the pullback that started at the end of October did not seem like it's exhausted yet. And, you know, really, we've had no real drawdowns over the past 6 months. We're due a little bit more of a clean out, and I expect this to go a bit deeper over the next week or two. We are seeing winners get targeted here. I don't really think that the move in Fed rate cuts was that, you know, much of a difference. Went from 60% to 50% of a December cut. That doesn't really matter much. What really happened here is people are taking money off the table. They're getting nervous about the retail sector because of the squeeze in the consumer and the wealth effect, because whilst we're seeing the digital asset sector get completely destroyed, that's leading losses, and that's weighing on the broader tech sector, those retail favorites. I expect that to play out a little bit more next week. It's going to be helped by the NVIDIA earnings story, which will be probably an incredibly positive earnings, but we've seen over the last 15 months that whenever we get NVIDIA earnings, the NVIDIA stock almost always sells off after it. It's kind of take profit moment. So that'll feed that narrative of taking some money off the table, a little bit more rotation, but this is not the bursting of the bubble. We are in an AI bubble. It'll burst horrendously one day, but I think the big bursting is 2026. This is just a little bit of volatility and a bit more to go.
Mark, I want to circle back to the comments you made at the very beginning, which is kind of the Fed cut wobbles that may or may not have moved this market. The dollar's stronger today, and the bond market isn't moving much. 412 on the U.S. 10-year this morning. The dollar stronger seems to be more of a reaction to what's happening in the pound and weakness on this side of the Atlantic. Can you just walk us through your thoughts on two very different countries that have two massive fiscal deficit issues? What does cable do in the face of those?
Yeah, so you're right. Dollar's a little bit stronger today, but remember, it was quite a bit weaker yesterday. Yesterday was actually a brief sell America day again, where we saw treasuries weaken, we saw the dollar weaken, and we saw U.S. stocks weaken. So I think, you know, the strength, a little bit of strength we're seeing today is just in that context. Sterling we're also in a sell UK moment as well. There's a real negativity about there, and everything in the UK news flow is being seen through that lens. And I do expect sterling to have more downside. And it also ties into the narrative that winners are suffering. UK stocks have had a good year. The pound has had a pretty good year. People are taking money off the table, and they're very negative about the UK at the moment. And that's the backdrop with which we're going into next week's CPI report, is that people want to see a Bank of England rate cut in December because they are very negative on the UK.
Mark, just very briefly, crypto, Bitcoin, where are we going?
As you know, Guy, I've been saying for a few weeks, I think we have a lot more downside, and that's the lead in risk sentiment, and that's why I think ultimately this correction has a bit more to go. That said, I have to say the price action's incredibly resilient. Bitcoin's broken to a 6-month low, but there's no collapse there, and in fact the altcoins are kind of bouncing back a bit this morning. So I think it's going to be a continued grind. We're seeing the digital asset treasury companies led by MicroStrategy get completely destroyed, and that is a narrative that still has more to play out.